Well, it's very clear he's changed course over the past quarter, but I think he's done it for good reason. Financial markets don't sell off for no reason. They've sold off because they're a good forward-looking indicator for where the US economy is going to go over the next number of months and quarters. So what we saw into the end of last year was a capitulation sell-off in risk assets, and the market's essentially questioning whether the Fed was on the right path. So what the Fed has done since is they've delivered the hike, which they were kind of obligated to do. They had to because Trump was telling them not to, so they kind of had to deliver the hike. But now they can pause, and what he's done is very sensible. He's listened to the markets. He hasn't said that the Fed is done, and we're actually not convinced the Fed is done. We do think the Fed pauses, and what's happening right now is that risk assets are rallying. If that continues over the next 6 to 8 weeks, it's a very different environment, especially if we get a decent payrolls number, for example, and if the data remains positive. So I think what he's done so far is quite sensible, and it gives him some breathing space, and they can just do some data watching for a few weeks.
And on the balance sheet, this is something that really rattled markets back in December, his comments around being in autopilot mode. And he since calmed markets last Friday when he spoke, but yesterday he said that he does see the need for the balance sheet to be substantially smaller than it is now. Do you think the market can take this more substantial quantitative tightening right now in terms of liquidity?
Yeah, it's very interesting. I read the minutes, and there was a very large section about QT. Lots of discussion about what should we do, and I would say going forward there's a reasonable possibility that they slow down in terms of their reinvestments. I would be surprised if they did it very soon, but certainly if we go into Q2 and there hasn't been a pickup and it looks like the market is still struggling, it's something that they could look at. The most likely scenario is what they do is they could do one of two things. They could either slow down the monthly reinvestments, or they could move the reinvestments shorter on the curve, partly in an effort to steepen the curve. Now, I haven't said that's why they would do that, but I can see that as being a rationale. So huge discussion. You know, it's just started. The balance sheet was 4.5 trillion. The target is 2 trillion. It really only started this year. I mean, last year it began, but last year it really started. And I think we're about a third of the way through. So we've got 2 or 3 more years of this to happen.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.